But let's take this conversation forward by welcoming our guest for the show. We have joining with us Arun Thukral, who's the MD and CEO of Axis Securities. Arun, good afternoon to you. And of course, we are looking at an interesting week ahead and of course a truncated one as well. Just before I get a quick take from you in terms of how the markets are looking for you today, we understand the FPI taxation impact if withdrawn versus the global market slowdown. How are you kind of looking at this whole idea of money returning to India as well as the kind of stress that we're witnessing in the markets?
So good afternoon, Fatima. So I think as we can see that today, if you see even after Reliance good performance based on the whatever AGM we saw that positive news, the market is not doing well, and over last few days this FPI issue, even I think now Finance Minister has met the stakeholders. So maybe that get addressed over a period of time. But the global slowdown, that the US market and all, I think that is a major cause of worry. So far we were saying that yes, in India FPIs are leaving. One is because of this taxation issue, and maybe some worry on the domestic economy is slowing down. And now we are saying even the global economy is slowing down. So overall negative sentiment. So as you said that this is a truncated week also. So people are not in a hurry, and that is what we are also advising our clients, that even if you have to buy, you don't have to buy today and maybe go for a staggered buy over a period of time. You will have ample time to do your shopping. So this will be now a consolidation phase with a negative bias. That is what we are talking to our customers, and that is what we feel.
Fair enough. Arun, just hold on for a minute because I want to also focus on what we're seeing when it comes to an RIL. Just bringing in my colleague Piyush once again, who's standing by. We see the Reliance Group is very much in focus with the markets. The company, of course, hosted their annual general meeting on Monday, and one of the bigger announcements that emerged was that the Saudi Aramco and the world's biggest oil producer are going to be acquiring a 20% stake in RIL. Now, this acquisition will in fact help Reliance cut debt worth about 1.54 lakh crores. Other major announcements have also come out, and that includes the launch of Giga Fiber, which is the monetization for which markets will be looking out for, and are actually going to be starting from September 5th onwards. And also some clarity that has come out in terms of the listing of Reliance Retail and Jio. Now, the company has also said that both these entities are going to be listing within the next 5 years. Push up that stock for our viewers right there. It is among the top gainers on the Nifty. It also has jumped by about 10%. Let's in fact also first get a look as to how that is looking on the charts, and also what the brokerages are saying about this counter since that AGM and those announcements there. The person, of course, who can decode a lot of this for us is my colleague Piyush. He's here. He's back with some more of those reports. Piyush, over to you really in terms of how we're looking at that surge after the announcements, and also how brokerages seem to be really looking at the kind of outlay that's being announced by the company.
Well, before taking one by one through across all brokerages, a 3-point summary. Number one, it's a thumbs up across the street again from brokerages on asset monetization visibility, whether it's Saudi Aramco, British Petroleum, tied with Microsoft, monetization of real estate, or public listing of Jio and retail. Again, it's a thumbs up. Second point again is earnings dilutive. Transaction with Saudi Aramco is going to reduce cash flow, is earnings dilutive, reduces the earning estimates for FY21. So again, that basically is the second, almost all brokerages actually are saying about that. And the third part again basically it's again a positive step, which everybody is saying higher oil to chemical conversion is higher margin business. Saudi Aramco technological collaboration is going to help into that. Now let's go one by one. So starting with the first, Morgan Stanley, the rating gets upgraded to overweight and the target has been set at 1349. What the brokerage is saying, that AGM announcements actually have given a part to balance sheet deleveraging. They also actually are saying that energy business stake sale is going to reduce FY21 earnings by 9%, and also the cash flow basically is going to reduce by 14%, because the energy business is a cash flow generative business, and that's why if you reduce your stake, again earnings also go down. Also now the second one again, Nomura again, which is probably again the best one, because they are also actually focusing on, apart from balance sheet deleveraging, what it really does is there is a 45% integration right now again from oil to chemical. Chemical is a much higher margin business. Tie with Saudi Aramco is going to lift this sort of conversion from 45% almost again to much higher 75%, and that will lift the entire margin profile of the energy business. Second point, they're also saying again that Jio Fiber margins will be around 80% as per the management, again compared to a 40% EBITDA margins for wireless. So again, the margins are going to be much higher, and EBITDA contribution is also going to be much higher. And lastly, again, they actually are saying that Jio and retail both actually are valued at roughly 650 rupees per share. The third one, CLSA, the sort of rating is buy, target price 1530, and again they actually are saying that fiber tariff is though again in line with the peers, but the content offering is really compelling, and that could be the clincher. The fourth one, Credit Suisse, they actually continue to maintain underperform rating. They were the ones who actually expressed concern about the balance sheet. Target price is 1028, still materially below. But broadly, if I sum up everything, Fatima, and if I give back to you, the sort of word is thumbs up from the street on a very clear net debt free path, asset monetization path, and perhaps again from the point of view of value unlocking.
Thanks a lot for taking us through that, Piyush. Value unlocking is really what we're talking about here, and you're looking at the various brokerage calls when it comes to the kind of news that we've seen coming out of an RIL. Arun, quickly to you on RIL, as well as, of course, the announcements we saw coming out of the AGM.
So I think as we heard just now that it's all positive, and all the three lines, whether it is oil to chemical business, whether it is Jio, and whether it is retail business, I think they have whatever announcement they have made, that all look positive, and I think they are doing the right things at the right time, and maybe that's why the market is rewarded them today. And over a period of time, the major worry was the large borrowing, which should go away once they get the money. So and the commercialization and monetization of Jio, that also is going to be doing well, playing well for them. So net, I think we are positive on the company, and over a period of time they should do even better.
All right. They should be doing better even over time. Let's just take a quick look at another story that's playing out. This, of course, is in telecom. We are looking at an Airtel. It's really tanking in trade at the moment. Counter seeing cuts of over 5% and is among the top nifty losers at the moment. Arun, telecom, of course, has been a very tough field to navigate. We've, of course, seen this trend of consolidation and, of course, the massive disruption that we saw coming out of a Jio. A little bit in terms of how you perhaps think investors could look at what's happening at an Airtel with perhaps a more long-term view when it comes to actually seeking opportunity, whether you think that's a possibility, or do you think that the sector itself is going through enough disruption at the moment and perhaps we should not really be getting into particular counters there?
So I will go the latter view. That's what you are saying, that there is a huge disruption going on, and obviously Reliance is a major player, and then there are a lot of regulatory things, and the market share fight will continue for some time. So maybe if there are better opportunity elsewhere, so maybe get into those segments, get into private banks, get into IT, get into maybe an FMCG or pharma. So there are many other players available. So it's better to avoid the Airtel and other counters in the telecom industry as of now.
Okay, so not really a good time to sort of get invested at the moment. I will just hold on a minute because I also want to talk about another space altogether. Let's talk about Inox and PVR. Now, both of these counters are in the red because they are basically suffering from Jio's first day, first show offer that we've seen come out. And that, of course, is on the back of the announcement that we saw with Giga Fiber. Those users will now be able to watch new movies on the day of release. Now, this is certainly another disruption and is going to be quite a large challenge to Inox as well as PVR right there. So, Arun, here we have it again. We have Jio that's coming in with another big bump of a disruption. It's obviously that first day, first show offer that is also really, disturbing the other big exhibitors. How are you looking at that bit of news as well as a PVR and an Inox individually?
So again, when we talk of disruption, all these kind of things will be possible. But maybe I will not be too negative on the multiplexes, because there are a whole lot of people who would still like to go out, maybe spend time outside, go to theatre, have food, have an evening together. So maybe that is a multiplex, one of the appeal, or one of the niche segment. So maybe we have to wait and watch. This may affect a little bit, but maybe not the entire population will only get into this. And there are people who would go at their own time, and maybe on a weekend evening, and they would go and spend time, and it's a family outing. So maybe that culture has returned, and then they have options also to go into watch and different kind of movies, different genre of movies, and at their own time what they decide. So maybe we should not write them off, and we should wait and watch for this particular piece of news. But yes, disruption is happening, that is for sure.
Disruption is happening, and we can see how it's actually playing out. But as you've pointed out on a very valid level, that going to the movies and the whole experience is something that we cannot really disregard for now. So one should actually just watch this space. But the sector where we can just see a very clear trend here is autos, and that's of course been one that has been on conversation on a regular basis when it comes to the markets, because the crisis seems to be deepening for this particular sector that's been hit by a slowdown. SIAM, the Society of Indian Automobile Manufacturers, has put out the sales data for the month of July. Now, this is also declining once again, and this is a consecutive decline for the 9th month. Domestic passenger vehicle sales have fallen by 31% in July, while the commercial vehicle sales have taken a 26% dive. We're looking at about 56,866 units, I understand. Now, the sectoral slump has triggered massive job losses. The auto index, in fact, is the biggest loser in trade. From that index, I just want to pull out some counters. Look at a Maruti as well as an M&M. Top losers right there on the benchmark index as well. Just a little bit more in this, we're looking at a Motherson Sumi that slipped 10% in trade after an expected weak first quarter. We had a conversation with Vivek Chand Sehgal, who's the chairman at the company, who said that despite the weak environment conditions, they have maintained their growth and expect to hit $18 billion in revenue by 2020. Just listen in to more from him.
The market conditions are pretty bad. You are seeing across the board a lot of big companies are degrowing, or they have a top line is not growing at all, in fact negative. So in that environment, if Motherson is growing at 14%, first of all, that is a very strong performance. We are waiting to get the returns from the investments that we have already done. Of course, we are still building some new plants, but that's a normal process. We keep doing that all the time. This is the last year of our 5-year plan. We have clearly said that we will be at about $18 billion by the end of March 2020.
Okay, so that of course is a difficult space as we've seen when it comes to overall autos. But Arun, what do you have to say in terms of kind of conditions that we've witnessed, as well as I guess some of the players, the larger players, where we are with them? How do you see this entire sector?
So auto sector is going through a cyclical slowdown that we have seen over last few months, month after month. We are seeing declining sales. And obviously the NBFC crisis has not helped even, and our monsoon was erratic. Now I think monsoon is coming back to the normal, and all these factors, and then the threat of electric vehicles and all that. So I think all this has got into the auto slowdown, but I think we should also look at mid to long term. So maybe over a period of time, when the interest rates come down further, when maybe the NBFC pain is over, and all these things may come back, because we have seen cyclical up downs and upcoming and then slow down again. So that cycle will come back. So maybe sometime in these kind of bear markets, one has to make the right kind of investment, and in the companies which have been there for years, whether you talk of Maruti and some other company. So these are the times one should take a small exposure and then start building on that. over a period of time, if we say that there are only 30 cars per 1,000 in India, and in China it is 80 to 90, and in US it is 700, and if the country is, we are saying, the fastest growing economy, so we are very much sure, and then more highways are being built. So sometime the auto sector will definitely reverse, and if somebody is building a portfolio, so these are the best opportunities, a bear market, then one should start taking exposures. And more than autos, maybe the auto ancillaries, they will come out faster, because they not only supply to domestic company but global companies also. So over a period of time we see the trend reversing, and that time in this portfolio will be of useful. But yes, as of now the sector is in a bad shape.
Sector is very much in a bad shape. Let's talk about another sector here. I want to move on to pharma, because we're looking at a Sun Pharma that is all set to release the first quarter earnings results. Here, of course, is my colleague. She's standing by with more on what the market is expecting and watching out for, just in terms of more behind that steady Q1 that is seen for Sun Pharma. We understand that profits are going to be rising, profits to rise about 6%, as well as margin expansion that is anticipated right there. Here, just take us through what we are actually looking at when it comes to the preview for this counter.
Right, so overall, if you see in terms of where pharma companies are concerned, the numbers have been pretty much interesting in the first quarter of FY20 as compared to what the street was estimating. However, in terms of Sun Pharma, if you see in terms of where the profitability growth is concerned, that is expected to be in single digits. We are expecting approximately a 6.5% up move in terms of profits. Our revenues are expected to move up by around 12%, and margins are expected to expand by almost around 100 basis points. Now, the sequential number in terms of growth is expected to be way higher, and this is mainly taking into consideration a lower base impact. Now, there has been a one-off gain as well from US supplies, and that is what is boosting the first quarter. The short-term US generic supplies worth almost around $60 million. That is what is the matrix that is expected to boost the quarter this time around. However, the US sales excluding Taro, they are likely to remain flat. India formulation business is expected to normalize this time around, and the revenues are expected to double on a sequential basis, again on the back of a lower base, because there was a disruption on the back of the distribution supplies. The acquisition of Pola Pharma is something which will be aiding rest of the world. However, the promotional expenses that could be higher for Illumia in the first quarter, and that is what will be impacting margins this time around. Clearly, in terms of geographies as well, what would lead the revenue growth is definitely the US business, because last quarter the company had alluded a one-time supply opportunity that started in the fourth quarter. So the street is anticipating that to continue in this quarter as well. However, on a sequential basis, there could be some amount of decline to the tune of almost around 3 to 4%, or it could be a pretty flattish performance. We will be watching out for management update with regards to the R&D spends as well as the marketing spends that could be related to Illumia. Secondly, Halol EIR will be cleanly watched out for as well in terms of the approvals go and the progress in the specialty portfolio, because the next leg of growth with regards to Indian pharmaceutical companies is going to come in from the specialty pipeline. So how strong that pipeline is built and what's the kind of opportunity that they have been relying on from this pack is going to be crucial. Updates with regards to Secure launch as well as the competitive products at Taro are going to be crucial in terms of management commentary, but overall a good set of numbers that is expected from a Sun Pharma.
Thanks for taking us through all of that here. A good set of numbers that are expected right there from the company, with the factors to watch out for, including those updates when it comes to what they're doing differently going forward. Arun, a quick take on pharma as well as a Sun Pharma.
So I was talking about auto, which is getting into a slowdown, and we are deep there. Whereas in case of pharma, actually we are coming out of that cycle. So for the last 5 years, pharma has not done well. So now we have seen some green shoots, whether you talk about Sun Pharma or Cipla and also, these are the companies which will be doing well, and over a period of time even the depreciating rupee will help. And what we have seen is that overall for the pharma sector as such, there is a good growth in the US territory, and the pricing pressure has come down. It has come down to around single digit. So all this I think will augur well for pharma sector, and we hope that sector should rebound, and maybe some of the companies will do it slightly better or slightly earlier than others. But what we feel that the worst phase is over for pharma, and maybe next mid to long term we are looking positively at the pharma sector.
All right, Arun. In fact, thanks for having taken us through your take on what's actually happening in the markets. Just before I let you go, what is your overall view on the June quarter earnings that we've seen so far?
So June quarter earning has been mixed. Maybe if you look at banks, HDFC Bank or Kotak Bank or IndusInd Bank has done well. If you look at IT, the large caps like TCS has done well. Infosys has actually increased the guidance also. Wipro has done well, but maybe Cyient and L&T Infotech has not done great. Cement has done slightly better. Pharma, obviously some of the companies and had done well. FMCG again a modest volume growth, but not the great growth which we have seen the earlier quarters. Maybe it's moderated, and maybe something to do with the rural growth and urban growth also. So this is some of the, and Reliance obviously we have seen yesterday great results. So net what we have seen is that yes, it has improved, but it has not improved to the extent which we were expecting. We were expecting a bumper increase in the earnings, but that has come out like top line has grown in many of the companies, but then there are some stories which have not done well, whether a corporate bank, whether you talk about Yes Bank, or in between there are, as I said, mid cap IT. So there are some spots where we thought that it could have been better. So net it's a mixed quarter for earnings as far as earnings are concerned.
Correct. It has been quite a mixed quarter right there. Arun, thank you so much. Your presence on the show most appreciated. That's Arun Thukral, MD and CEO Axis Securities, joining us right here on Markets Midday and really taking us through